Good morning, Vietnam. We're back at the MBS. That's Mortgage Bro Science. And it's a big day today. I got myself my own mic because my partner in crimes are all too busy being unemployed. So it happens. But today, what I'm going to do is go through the entire mortgage process. If you follow the channel, you know I'm going over DTI, LTV, different programs, what to expect, how to calculate rate, etc. But realistically, we need to meat and potatoes and what you should do and what you should expect when it comes to obtaining a mortgage. All right. So your first step is going to be to get pre-approved. Even before you talk to a realtor, these might be interchangeable, right? You go, hey, realtor, I want to buy a house. And he's going to say, hey, you need to get pre-approved first, right? You can't just go, shooting blanks. You need to have some validity here to be able to put an offer in on a home. All right. So we're going to go step one here. Step one, we're going to get pre-approved. All right. Now, how this is going to look is income calculations I did before. You're going to call your local bank. You're going to be like, hey, may I speak to so-and-so who can help me with a mortgage? And they're going to be like, yes. And then I'm going to answer the phone or whomever and is going to say, all right, well, where you're looking to buy, right? Get a general feel of it, where the tax is, where you're thinking about qualifying, okay? And that's great, all right? First home, that's very important. Is it your second home? Is it an investment property? So on and so forth. All right. For all intents and purposes, let's just assume you're a first-time home buyer. Like, yeah, it's my first time buying a house. Do you have any special programs for me? I heard FHAs are good, and then in which case I'm going to say FHAs are not good. And here we go. So then I would say, all right, great. Well, it's a simple process. I just need to do simple math. All right. So then I'm going to ask you for your salary. So I'm like, John Doe, what is your salary? And you're going to say, I make with bonus, about $115,000 a year. All right. Now we're going to do that math again. All right. So you make $115,000 a year. To which I say, all right, it's a super simple process. Okay, take out your HP12C, right? So you're at 115, not 1 million, divided by 12. All right, that's going to leave you with 9583. Okay, and usually I walk them through the process. I just say, what I'm doing now, I'm just calculating your debt to income, and I'll give you three numbers, like 30%, 40%, and 45%. Okay, so I say, all right, here's what I'm doing. I'm taking your gross annual salary, I'm dividing that by 12. That's how I get this figure, okay? Divided by 12. All right. And then from there, for all intents and purposes, I'm just going to write it. Boom, boom, boom. Hopefully you can see that. 30, 40, and 45, right? The max and then conservative. What I want to see you at is a 30% back ratio. All right. And I'll keep it realistic with debt and whatnot, okay? I'm like, all right. From here, I'm taking your gross monthly pay, including the bonus. All right, I don't really like to use bonus, but you can throw it in there, okay? All right, and I'm multiplying that by 30%, so 0.3, all right? That leaves you with a remainder of 2875, all right? So we don't want all of your debt, including your new mortgage, to exceed this figure, all right? Now we're going to take out student loans. Let's just say 300. And let's just say a car lease, car payment about 450, okay? And we'll say car. All right, so from there, just less 75. Okay, you're looking at 2125. Now, that's all good and well until you remember you got to pay taxes and you got to pay insurances. Okay, so from here, what we're going to do is we're going to estimate taxes and insurance. Okay, I'm always conservative on this one because you never know. You won't have homeowners insurance until like you're very at the end of the process, like 10 days prior to close is when I say usually bind the insurance. All right, but you should really start shopping around for insurance as well. Okay, so we're at 150. All right, and then just say 500 in taxes. All right, this is an estimate until we know what you're actually buying. Obviously, once you have an offer accepted, we can just Zillow it and you can see the taxes. Or tax assessments are public. You can always look these up, okay? And then before buying a home, your realtor should have information, hopefully, if they can do their job, which will give you your taxes, all right? So from there, you're just going to take out another 650, okay? Today is, what's today, the 5th? Yeah, today's the 5th. All right, so that leaves you at 1475. Now the number doesn't look so great, does it? So 1475 just for principal and interest. Okay. Payment, we'll just say it's about 6.25 on a 30-year fixed. All right. Watching previous videos, then I would say do the ARM, but we're just going to do it 30-year fixed. All right. So then I would say, all right, John Doe, on a conservative front, I can qualify you for about 240. All right. It's 239,558. Let's call it 240. Okay. And then I would do this process for the various percentages, right? Debt to income, right? 40 and 45. I really don't want to see you go to a 45 back ratio. There are certain circumstances in which it makes sense. If your spouse isn't going on the loan, but she is income, if you make cash, what have you. Okay. All right. Then from there, And I'm like, all right, awesome. I can send you a pre-approval. Now, some guys would be like, I need an application before I can send a pre-approval. In which case, I have a document. I could send them out whippity snap. That's why I send like 4 or 5 at a time. It really doesn't bother me at all. Okay, especially when you're going to put offers in on homes, you want some ammo in case you're wheeling and dealing, and it's heavy competition. Okay, so that's your first step. You're going to get pre-approved. Okay. Then, once you're pre-approved, you have the offer letter. Usually, I can say, send me some listings so I know like where your range is and what I need to send you a pre-approval for. Okay. Actually, excuse me. Before I go through that, all right, let's divide this by 0.8. So your purchase price. Okay. So 240 at 20% down. That's a purchase price. A PP, your PP of 300. All right. And obviously, if you increase your percentages, that's going to increase. Now, it's funny, as I'm shooting this video, my one buddy said, dude, you got to dumb it down. And my wife said, Ryan, honey, I love you, but you need to talk slower. So now I'm going to try to reel it back in and talk a little slower. All right. So you're going to get pre-approved. All right. So we'll do 1B. Okay. And then you're going to get a pre-approval letter. All right. So you're going to get pre-approved. Upon pre-approval, you're going to get a pre-approval letter. You don't need an application. I don't care what anyone says. You don't need to submit an application because, again, you don't want everyone and their mothers pulling your credit. All right. 1 pull, 2 pulls is not going to kill you if it's within a certain time frame. But everyone and their son pulling your credit, eventually it will take a hit. Now, people with really good credit, it's not going to bring you down. You want to see a 780. All right. And I'll go over the parameters. I'll say, yeah, credit used to be most indicative of a good rate, but now really having skin in the game and putting more money down is a big LLPA, and that's how they're going to establish your rate. All right, so it's more important that you put more down. 25%. Actually, it's 30% now. 30% is like a good threshold versus what used to be 20. Just like 740 used to be perfect credit, now it's 780, and it's very fluid. It always changes because they're assessing risk. Right, we're anticipating a lot of defaults in the next coming years because the housing market, everything was inflated. People are getting laid off. AI. Okay, but now I'm just going off on tangent. So your first order of business, you're going to pre-approved. Okay, 2. All right, you're not going to go dark. I would say when you choose a lender, you like the programs they got. The guy's trustworthy, or the woman's trustworthy, I should say. They have good rates, less fees. They're not charging like 2 points for a good rate. All right. In which that actually happens. And then like sometimes people don't catch it. And like, why the hell are you charging me 2 points? And they just take it off. Sleazy business. Anyway, so then you're going to apply. All right. Now, this is important. You don't need to do it immediately, but you need an application. The reason you need an application is because everything needs to get organized, and more than likely, you're going to want to close in 30 days. All right, these sellers don't want to wait. The listing agent, they don't want to wait. They need their commission checks. So you need to apply. You need to have all these documents. Remember, these are on the board here. All right, so it's tax returns, W-2s, pay stubs, bank statements, any residual assets. If you have more reserves, it also helps the bank assess risk, and if you have more reserves, you actually might qualify for a better rate. Okay, parameters for programs vary, but yes. You won't have mortgage statements if you're first home, but if you have multiple properties, you're going to need mortgage statements and then homeowner's insurance. All right. Now, if you're self-employed, you have a business, Schedule C is going to be on your tax returns. And then if you're a partnership, then you'll have 1065s and business returns. All right. So just know when I say tax returns, all of your tax returns. I'm like, oh, you didn't ask for those. I'm like, dude, I asked for your tax returns. Like, I meant all of them. All right. So you're going to either upload when you apply or email. All right, so when you apply, you're going to upload /email documents. Okay, so this is step 1 and 2. Now, step 3. Okay, you're going to look at houses. All right, so realtor /Zillow. Shout out Zillow. So how the process really works these days is you're probably just going to go on Zillow, send a Zillow listing to your realtor, and then your realtor is going to schedule an appointment with that realtor, and then you're going to walk to the house with that realtor, and they're going to say, oh, this is the kitchen. It's like, oh, is it? I didn't realize. All right. And then if you like the house, what you're going to do is you're going to submit an offer. How the offer works is it's like a preliminary contract. Your realtor is going to send it to you to sign. All right, so you're going to get a copy of the contract via your offer. And what they're going to do is they're probably going to attach the pre-approval letter, to your offer. It usually goes on the back of the contract. And then what happens is once you submit an actual offer, that realtor, listing agent, is obligated to show it to the seller. All right, and then they usually have a final and best. Usually it takes a week, depending on where you live. It could take 2 days, right? If they're trying to rush, right? Because everyone's trying to rush. It's always a rush. they like your offer, you're going to get accepted. Okay. So let's just do 3B. 3A is get offer accepted. All right. So once you submit your offer, the listing agent's going to review. They're probably going to end up calling that really like, oh, how strong is your buyer? Then they're going to call the lender. This is the best part. They got to like justify their paychecks. They're always like, oh, I see you sent a pre-approval letter for John Doe. I'm like, uh-huh. Some actually like what their income is. And like, I can't tell you what their income is. Like, that's none of your business. I sent you a pre-approval letter. That's good enough. Now, truthfully, I kind of get why some people just send pre-approval letters without like going through all the steps and calculating income and stuff like that. So it's like, I get it, but it's pretty funny. It's like, well, I wouldn't have sent a pre-approval letter if they didn't qualify. So just shut up, stop bothering me. Anyway, so then you're going to get offer accepted. Now, once the offer is accepted, then you're going to go into what's called attorney review. All right, now some states, they actually don't even need an attorney. Hell, in Jersey, like South Jersey, doesn't even use attorneys. But let's just say you go into attorney review, you do the inspection. Okay, you're going to do an inspection. Now, during the COVID, people were waiving inspection because they really just wanted the offer. Now, I don't advise anyone to do that because inspectors, they thoroughly go through the house and make sure that there's no shoddy work or nothing's out of code. Your house won't crumble. Your house won't catch on fire. No fire hazard, all that stuff. So you're going to get an inspection. Okay. Now, your inspection, that's going to be your ammo. So what you're going to do is you're going to get the reason they waive inspection A is because they don't want you to come back and say, oh, I want to sell her credit because, the electrical panel is 80 years old. Okay. So you're going to get an inspection. When you get the inspection report back, all right, you're going to negotiate. Negotiate credits or PP. So you're going to negotiate the credit or the purchase price. All right. Now, if you remember, credits cannot exceed closing cost. And it's also, depending on how much you're putting down, let's just say 20%, it can't exceed 6% of the purchase price. So if you're buying a home for $300,000, okay, it can't exceed 18 grand. All right. So it's something to be cognizant of, but this is your wheelhouse. All right. The inspector is going to go through the entire house, the entire property, and write down everything they see fit. Now, usually it's their job to cover their ass. So they're just going to make it like it's the world's fallen. Probably not as bad as it seems, but nonetheless, they'll point out the big stuff and they'll say, hey, are you really sure you want to buy this home? All right, so getting an inspection is very important. Now, I don't start the mortgage process until we're all clear with the inspection. There's no sense wasting everyone's time in ordering the appraisal. All right, I had one buddy once where his realtor, classic, in a rush. He's like, oh, this is the way it is, the way it is. He was a first-time home buyer. It was so sad. And he wanted me to order the appraisal before they did the inspection. And I said, Mr. B, this is wrong. He's like, I know it's backwards. This is how we have to do it. I'm like, you don't have to do anything. All right. So anyway, so my buddy ended up wasting like probably a couple thousand because he went through the process 3 or 4 times, a couple thousand on inspections and appraisals, right? It felt like it hurt me inside. I was like, Eric, this is not what you should do, right? But either way, he did it, and it is what it is. All right. So then what's going to happen now is after the inspection is done and we're good to go, I'm going to send out the initial disclosures and loan estimate. Okay. So this can only come after you apply. All right. And after you get an offer accepted. All right. So the initial disclosures is probably 80 pages of like corporate mumbo jumbo, like government compliance, the Patriot Act. Like it's a document that literally asks you if you're a terrorist, which last time I checked, it's kind of hard to be a terrorist. And if you were a terrorist, you probably want to tell anyone you're a terrorist. So ignore most of it, truthfully, but the biggest thing is the loan estimate here. The loan estimate is the meat and potatoes. All right. It goes over how much you're putting down, the purchase price, your escrows, and page 2 of the loan estimate is most important because it breaks down all costs. Okay. You're going to have bank fees, title work fees, recording fees from the state and the government, your taxes, your insurances, and your per diem interest. So page 2 actually breaks it down. It's sections like A through A, B, C, D, E, F, G, H, I, like A through J. And it breaks down everything. Okay. And section A is going to be super important. Section A, that's where you're going to figure out if your lender's, trying to shiest you and charge you points. All right. Unless discussed previously, once you see points, whether it be discount or origination, I would just, again, if you're going to a lender, good luck. I would just say go to a bank, right? Because they're wheeling and dealing, trying to make the most money off you as they can. Let me erase this. Okay. So we got how much you qualify for here. All right. I just went through the pre-approval process. So you're pre-approved, offers accepted. Then we're going to send out the initial disclosures and loan estimate after you have a signed, fully executed contract. All right, you're going to review the loan estimate with your lender. I got some people actually that they're just a lot smarter than me. Like I said, this is not rocket science. So they just sign it, don't even ask me questions. They're like, yeah, Ryan, looks good. I'm like, I ain't making my job easier. I'm like, as worthless as a realtor. But anyway, so they sign it, okay? Now, at this point in time, all right, rate should have been discussed. All right, it's all like fluid. Realistically, I don't like to lock anybody until we have a signed contract and we're good to go. But technically speaking, you could lock somebody in upon applying. The issue here is, your rate lock's going to be for 60 days, and it actually costs even banks, lenders, or money. And I'm a bank first kind of guy. If you actually don't go through the deal, we break that bond and it actually costs money. It's just a bad look. So I really don't like to lock until we know we're going through with it and then we sign the initial disclosures. All right, because in the initial disclosures, you're going to have the intent to proceed. All right, you're going to sign that. That's probably going to be page 1, which is funny. It should be at the end of the disclosures, but it's at the beginning. Doesn't make much sense, but you're going to sign the intent to proceed. Then I start discussing rate lock, and I always recommend just locking. Everyone's like, oh, what if the rates come down? I'm thinking like, how much are they really going to come down? Right? I don't foresee them coming down too much. Right? An eighth. It is what it is. Everyone's going to offer you a float down option. All right. Usually it's not capped, but it might be like a quarter in fee to float down. And then we do math and see if it's really worth it. And then if you're going to get a credit, it's going to pay for it. But any which way you swing it. So after step 6, I would say discuss lock. All right. Now you're going to have people in the comments here like, oh, you don't have to do that. You can lock it anytime. I'm like, I know, I just said that. But really, for the sake of the bank and not playing games, until we have the signed loan estimate and intend to proceed, I don't like to lock. All right. Locks cost money. You're breaking a bond. You're breaking a covenant, with either the bank itself or an investor that they're selling the loft to. Okay. So that's step 6. Discuss lock. We'll just say lock because I like to lock. Okay. Throughout this whole process, though, when you're getting pre-approved, this is what I always say, like whether you qualify for a first-time homebuyer program, if you should do the ARM, 30, 20, 15-year fixed. Okay. So you should pretty much know what you're going to be locking into. And I always say, like, I'll monitor it as we go. And every time I say I'm going to monitor the rates for you, it's always like, I know they're not going anywhere. Like, what do you think? They're going to jump a point, drop a point? Like, no. It's a volatile market, just like everything else. The MBS, it's all secondary market stuff. They go up, they go down, but it's not going to be that extreme. All right. Now, you sign the initial disclosures, discuss rate lock. All right. Next, what happens is order appraisal. Okay. Now, this is the part that trips people up. It's pretty funny. So the inspection and the appraisal are independent of one another. All right, the appraisal is just going to gauge value. The inspector is going to gauge quality of the home. All right, but you could buy a dog water home as long as it appraises. Okay, so you're going to order the appraisal. The appraisal is a closing cost paid prior to closing. You're going to get charged on a credit card. Actually, technically speaking, you could write a check, but we live in 2026. You're going to charge a credit card to your appraisal. Appraisals, depending on the home you're buying, all right, they could be anywhere. When I first started, appraisals were $350. Now it's like $600. So it's just roughly $600 to $1,200. If it's a construction loan, if you're buying a $3 million home, you need to get double appraisals there to substantiate the value. But $600 to $1,200 for a majority of you, it's going to be roughly $600. You're going to charge that to a credit card, all right? And simultaneously, we'll do 7A. All right, you're going to be submitted to processing, okay? Now, if your loan officer did their job, this part's going to be really easy, right? If you submitted all the documents, because this is as much as the borrower as it is on me, if you submitted everything I asked for, and I would have asked for this via email and over the phone, well in advance of these next steps. All right, so if you uploaded and submitted everything and didn't play games, this processing is going to be super easy. On a purchase, you go to underwriting immediately subject to the appraisal. So as long as you gave me everything I asked for and I reviewed everything, essentially pre-underwriting it, you're going to get approved in probably 3 days. All right. So submitted to processing, assuming you're compliant and at least a little competent. It's not rocket science. All right. 8 is approval. And we're going to say commitment letter. All right. So you're going to get your approval or commitment letter. This means you're approved for the loan, like officially approved, not just pre-approved. You're officially approved. All right. The listing agent is probably going to ask for this commitment letter because on your contract, there's going to be what's called a mortgage contingency date, which means that you have until X date to get approved. All right. Saying that you're going to get a mortgage. All right. Unless you're buying cash, but you want to be watching this video if you're buying cash because you're doing a lot better than I am. All right. So you're going to get your commitment or approval letter. However, from there, you're not out of the woods. When you get your approval or commitment letter, there are conditional approval documents, meaning they still need to collect additional documentation in order to clear your file to close. All right, so this is a big one. I'm going to write this big because everyone thinks once you're approved, it's like, oh, I'm done. No, that's not true. And we're going to say collect approval docs. All right, now everyone's like, well, what do you mean? How much more documentation could you possibly want from me if I just gave you all this? And I'm going to say, trust me, it's a lot. Like, for instance, homeowners insurance. I'm not going to ask you to bind homeowners insurance 30 days prior to close. I always say, do it 10 days prior to close. I've had people that got homeowners insurance the day of closing, and it wants to freaking drive me through a wall. But technically speaking, you can. So we're going to get your approval docs. We're going to get confirmation of your deposit. When you buy a house, you're going to put a $5,000, $10,000, $20,000 deposit down. The bigger the deposit, the more serious you are. All right. And it is refundable if you back out of inspection. So you're going to put a deposit down. We need to show proof that you put the deposit down via a canceled check and a bank statement. Sometimes we ask for attorney letter, okay, confirming receipt of the escrow deposit, whether it be from the seller's title company or the buying attorney, vice versa. Either way, these are examples of some docs. Or like this happens all the time. People send me pages 1, 3, and 4 of a bank statement because page 2, it just says this page is intentionally left blank. And guess what? Banks, lenders, they still want to ask for it. It makes zero sense, but they just want to make sure you're not hiding anything. So stuff like this, right? Maybe you need to update a pay stub. Maybe you need an explanation of why you missed a payment on a credit card, or you had an inquiry, you were buying a car, right? And the reason they're going to ask this is if we see inquiries on your credit report, we're going to make sure you didn't take out much debt. In a previous video, I said to y'all, like, don't take out debt while obtaining a mortgage, right? It just causes headaches, and then you might not qualify, all right? So then you're going to collect the approval docs. And this is super important. Like I say, everyone's got to check your email in the morning when you wake up, at lunch, when you're on your break scrolling on Twitter anyway, or Instagram or TikTok, whatever's like melting your brain, or at night. This way you keep the process going. In all reality, all these steps can take a week, but very seldom does that happen because people just like wipe their hands with it and say, oh, I gave him everything he asked for initially, now he's done. But no, that's not the case. All right, we're going to ask for explanations and additional documentation and anything that we missed. Not to mention there's government oversight and compliance that we need to address more often than not. Like, for instance, the tax transcripts. We need to make sure that the tax returns that you provided with me are the same as what you filed with the IRS. And I know what you're thinking. Oh, what are you talking about? Like, yeah, people try to fraudulate tax returns. It happens. So it's not you, it's everyone else. All right. Now, after we get conditional approval documents, all right, we're going to just put homeowners in here. Homeowners insurance. HOI is homeowners insurance. All right. Then you're going to bind. Once we have all these documents, then we submit to clear to close. All right. In the interim, I should have said this. The appraisal is probably going to take about a week. You could rush it, but there's never a rush. Just trust me. There's never a rush. So the appraisal is going to take about a week. That's already coming in. Appraisal's fine, right? This is like the cleanest deal ever. You're W-2, you make good money, you're putting enough down, there's not that much competition. So then after you collect all of the additional approval documents, the conditional approval documents, the commitment letter documents, what have you, then you're going to get CTC. Once again, even though you're CTC, you're still not done. What if I told you there's still more paperwork? You wouldn't believe me. All right. Now, this is the big one. I'm going to put 11 up here because this happens, and you might think, like, how is that possible? And I'm like, trust me, I get it. So there's this rule with, like, the right of rescission with a pre-closing disclosure. Excuse me, my nose is itchy. With a pre-closing disclosure, and it's not even the same as the final closing disclosure. The pre-closing disclosure is when our closing department works with a title company to try to get the final figures for closing, okay? So they're going to send a pre-CD. All right, the rule is as long as you send a pre-CD out at least 7 days prior to closing, you could even not view it as long as it was sent. And you can prove that it was sent, you have to sign it. All right, but sometimes the pre-CD goes out 3 days prior to closing. Now here's the kicker. That needs to actually be signed 3 days prior to closing. If you don't sign that pre-CD prior to closing, you might delay your closing. This is why I'm saying check your emails. Now, it's tough for me to say, whatever, just freaking sign it. Just sign the thing. We don't need to review it. But, you know, what you should do is you schedule time to call and review the pre-CD. The title company should also be reviewing this with you. And then you'll find the final CD at closing. Okay? So, say you're closing on June 30th. You know that pre-CD needs to go out on June 27th, right? 28th, 29th, the 30th would be the third day, and that's allowable. Okay? So, make sure that you have that pre-CD and it is signed. You and your wife, you and your fiance, you and your girlfriend, whomever. All right. You got to sign that pre-CD 3 days prior to closing, or else closing is getting delayed, and then everyone's all pissed off, right? You schedule the moving trucks, your realtors want commission, et cetera, et cetera. All right. So after you get CTC, technically it could be sent before, but all right, you're gonna get that pre-CD, and this is still not final. Believe that. It's still not, most of the time it's not final. You won't have the final figures until the day prior to closing on the final CD. All right. Now, it's very important that you sign this pre-CD. It's not really relevant now because it's a pretty slow market, but I remember during COVID, like pre-CDs were going out on the last day at like 8 p.m. And I would have to call people at 8 p.m. like, hey, I'm so sorry, the pre-CD just went out. And then they would get mad, like, what? This is very unorganized. I'm like, hey, you think you're the only one refinancing? Everyone in America is refinancing. Everyone wants 2.5%, right? So you're going to sign a pre-CD, and all this can be avoided if you just check your email. All right. The pre-CD is going to be very different than the loan estimate, right? This is, again, an estimate. That's my favorite. People are like, oh, the closing costs seem high. I'm like, it's an estimate. We don't know a lot of these fees, right? So it's going to be similar, but a lot different. Usually it's less, and it could change based on if you change your term, if you did decide to buy points, if you got a credit, so on and so forth. So you're going to sign a pre-CD at least 3 days prior to close. And then once you sign a pre-CD, then your title company, your realtor, your attorney, they're all going to get together. You're going to find a place where you're going to meet up and close, whether it be your realtor's offices, the title company's offices, or your attorney's office. All right? And then you're going to sign your life away. And that's the mortgage process. So this could happen very quickly. This could happen in 2 years. Or sometimes I work with people for like over 2 years. It's bananas. Like, hey, I need a pre-approval. Hey, I need a pre-approval. Hey, I need a pre-approval. And like 2 years later goes by, like, I got 3 kids running around and 2 dogs. It's crazy, right? So you're going to get pre-approved first. All right, it's just simple math. You really don't need to apply at the moment of pre-approval, but if you're actually serious about buying a house, you want to get organized, you want to get all these documents and go from there. Then you're going to apply, you're going to upload said documents or email. I actually prefer email. This way I know I have them. I go in the search bar and type in, and then if you're smart or a smart ass, she's like, oh, I sent it to you. I'm like, I forward you the email that you just sent me. Nope, you sent me this, this, and this. I'm missing this. So email works great because I know I'm right. All right, and then once you have your pre-approval letter, you're applied. All right, everything's good as right as rain. You're gonna go to your realtor. You're gonna go on Zillow. You're gonna find houses that you want to view. All right, you're gonna ask your real estate agent, hey, I want to view X, Y, and Z. Let's schedule a time. All right, you're probably gonna go on the weekends because everyone works, 9 to 5. But you could go during the week if you're either flexible or go after work. Right. When you submit your offer, they're gonna attach these. It looks like a contract. The contract or the offer with the pre-approval letter. If the listing agent and the seller likes your offer, it's the best offer. All right, you're already pre-approved. You can close in 30 days. You have the money. Then they accept your offer. Then you're going to schedule an inspection. Once you get the inspection back and you still want to buy the house, all right, there's some stuff wrong. You're going to negotiate either purchase price or credits. Credits I like more because money now is worth more than money later. What I mean by that is if you negotiate the purchase price, you're not going to see the rewards of that for 30 years. All right, 30 years you could be dead. Who knows? And then after you get the signed contract, we're going to send out the initial disclosures and loan estimate. I don't like to send out the LE until we get the inspection back and you still confirm that you want to proceed with the purchase. All right. Once we review the loan estimate, super important, we review the loan estimate, not the rest of the disclosures, just the loan estimate. All right. Then we go to locking. All right, we got to discuss lock. I always recommend just lock and be done with it. All right. It's not going to kill you. And then after you submit the processing, sign the disclosures, and intend to proceed, discuss the lock, then they're going to order the appraisal. That's going to get charged to a credit card. All right, prior to closing, it is on the loan estimate, but it's paid for prior to, but we'll say a cost associated with buying a home and home ownership, so it needs to be disclosed. All right, then you're going to be submitted the processing. As long as you were competent, did your job, and listened to me, weren't in pain, got me all the documents I need, you'll get the conditional approval letter, let's just say 3 days max. And then you're going to say, oh, mine took longer than 3 days. I'm like, well, you probably didn't provide everything we needed, or the loan officer didn't review everything and ask for additional information that he's seen. Additional stuff could be you didn't provide your second job pay stubs that you need for income. You didn't provide end of year pay stubs to calculate bonus correctly. You didn't provide all the bank statements. Or you have other self-employment income via business returns that you did not provide. All right. So that being said, you get approved in 3 days. All right. Once your approval comes out, you're going to get the commitment letter or the approval letter, but there's going to be conditional approval documents. The biggest one's going to be subject to getting homeowners insurance. Every lender is going to require you to have homeowners insurance. Unless you're buying cash, you need homeowners insurance. That's our collateral. If it burns down, we want to make sure our collateral is insured. Because technically the bank owns the home, not you yet. When you pay down the principal balance, you obtain more equity and then therefore ownership. Equity is ownership. However, the bank owns it, so you need homeowners insurance. Collect all the other documents. You'll see it on the commitment letter when you get one. Once you collect all of these documents, then you get the clear to close. And once you get the clear to close, or maybe at the same time, you're going to get that pre-CD. This needs to be signed 3 days prior to, okay? Sign a pre-CD 3 days prior to closing. All right, close on June 30th. You need to sign that bad boy on June 27th. All right, and then you're going to go to the closing table. I'm not even going to write that step because at that point I'm kind of out of it because your title company, realtor, and or attorney are going to take it from there. You're going to meet up. You're going to sign all the paperwork, and then you're going to get handed the keys, and you're at his ring. So this is the mortgage process. All right, I'm actually just going to phase out right now and let you just take this all in. If you want to take notes so you don't have to rewatch the video. I caught myself talking fast again. Either way, take it all in. All right, shout out Master Chief. This is the MBS Mortgage Bro Sign. So please like and subscribe, and I'll give you guys a little bit to think about where you are in the process. In a previous video on my do's and don'ts, I said start the process 2 years earlier. I was super proud of my buddy Kev. He called me. He's thinking about buying a home, and he just got a new job. And I said, Kev, hourly with commission, they're going to want to see 2 years. But he started the pre-approval process 2 years in advance. And I told him, I said, dude, I don't have a good product for first-time homebuyers anymore. Go to my other buddy. He's a best product for first-time homebuyers. But start the process. I would say, let's just put this 2 years. The reason you want to do it 2 years and just plan ahead because you never know what life's going to throw at you, and you want to see where you stand. So get pre-approved. You can get pre-approved 18 times. But